Warren Buffett built billions by doing the opposite of what most investors do. If your portfolio's barely growing, it's not bad luck, it's you. This video reveals the silent mistake that's killing your wealth. Most of us like to think we are smart enough to beat the market. But constantly changing your investments is one of the biggest reasons your portfolio isn't growing the way you expected. You buy a stock. It dips. You panic and sell. Then you hear about a new ETF or crypto and jump on it. Next week, someone on social media says it's all about dividend investing. So you switch again. This cycle is exhausting. And more importantly, it's expensive. Not just in fees or taxes, but in the lost power of compounding. Warren Buffett once said, "The stock market is designed to transfer money from the active to the patient." And of course, he's right. Compounding is like a snowball rolling down a hill. It starts small, but over time, it builds unstoppable momentum. But every time you change investments, you reset the snowball. You're chopping down the tree before it can bear fruit. Let's say, financially free, Fred invested $10,000 and just let it sit in a low-cost index fund earning 8% annually. After 20 years, that $10,000 could become over $46,000. But if you were switching strategies every year, panicking during dips, or pulling out after headlines, your returns would be much lower. Not because the market failed, but because Fred didn't let compounding do its job. Trying to beat the market is like trying to predict the weather a year from now. Sure, you might get lucky once or twice, but rolling a dice isn't a strategy. Even professional fund managers, people who are paid millions to study the market full-time, underperform index funds year after year. Warren Buffett himself famously bet that an S&P 500 index fund would outperform hedge funds over a 10-year period. And guess what? He won. By a lot. So what's the smarter way to invest? Pick a diversified, low-cost index fund or ETF. Invest consistently, whether the market is up or down. And the most important step, leave it alone. This isn't flashy. It won't impress your friends at dinner parties. But this is exactly how Warren Buffett built his wealth. By being patient, ignoring the noise, and letting time and compounding do the heavy lifting. Stop chasing the next big thing from media tips, and start investing like the pros. Compounding is strongest when it is left alone to grow your wealth like you could have never imagined. So why are you fighting against it? Once you have learnt to let compounding do its work, you need to learn how to avoid the daily traps that will steal your money out from under you. If you don't want to be held back from your goals, check out this video here.